Hey, everybody. Welcome to Tuesday, January 24th, 2023 to the Micro Crude. We'll go through and look at some of the charts. Thanks for all your comments. Hopefully I'm improving every day. Let's look at the daily. Remember where we're at here. Again, from beginning of January, we created the failure. We're moving up at this point. The long trade from January 9th is still valid. Our stop is now moved up to just below the price failure here at 28.44. And we've come up. Yesterday, we took out resistance by a little bit. Previous high was 82.66, and we took it out to 82.75. So we took it out by 9.9 ticks. So, today we're getting a little bit of a pullback today. We see this a lot when the market's making new highs, new extended highs. So we'll see where it runs. But today we're having this pullback day. What that looks like on an intraday basis is the 187 here, and this is from market open till current. We slowed the chart down to the 187 for a reason. The rationale in trading the chart live in the room is the 427 is a really nice chart. But as we're chatting back and forth in the room, if you miss a trade, you miss a trade. With the 187, because there's more trades, if you happen to get distracted and miss a trade, hey, there'll be another one. So it's always easier that way. Now, this is the day. I'm going to spread the chart out a little bit so that you can see the entries and exits a little better. So one of the things somebody had mentioned that I do. So I'm going to spread the chart out. Again, we can go ahead and move my ugly mug over here. And we'll see the start time. Draw a little horizontal line here at 6 o'clock to start. So we're going to take our trades, and background color is white. We're looking for that buying opportunity. There's my price failure. There's my confirmation bar. And again, at this particular point, at that point, target is a new high coming from a price failure. Confirmation bar is blue. There's our entry. Now, the entry bar this early in the morning, once that bar closes, it confirms that our confirmation bar was a price failure. At this point, you can either get out of that trade, you can exit that trade, or manually trading, keep your stop tight to the bottom of your previous bar initially here, and then each time it moves up so that, price doesn't pull back on you. So entry here, move our stop up, price continues to move up. We create a match, which is telling us as well that price is going to try to go up and hit it. It does. Price moves back up, creates another price failure here, continues to move up, and we have a red bar. Red bar is your warning signal to get out of a trade, and I rarely ever ignore a red bar. So our entry point is here, and our exit point, which is the close of that, or the open of the bar following the red bar, is right here. Now, price pulls back, gives us a failure. Great. We can see that this is a 2-bar combination that's creating that failure. the confirmation bar that confirms this failure. Once it closes green, no buy trade. The next oscillation is a price failure here. Well, and we had a target as a failure. Next oscillation is a price failure. Got to pause. Crap. Sorry. Telephone calls are so much fun. So we see here, price pulls back, creates a failure, no target. Price pulls back, creates a price failure here. Again, no confirmation, no target. And that's the really thing of beauty about, watching this thing keep you out of consolidating trades. Price comes up here, creates a failure, no confirmation. Price creates a price failure, and we get confirmation. We break through that bar. So at that particular point, you go, okay, there's my entry, the open of the bar following the confirmation bar. And this is where your pullback comes in. 3 green bars in a row, and then your exit. So your exit, because the third green bar matched, your exit is the open of the bar following that, and then there's your entry. Oh, wrong direction. From here to there. $12 points. $12 a contract. I hate losing trades. But this way we get to see all. Now, price is pulling back. We're only looking for buy trades because it's white. Then we get a color change. We break through the failure. We get our color change. It's okay, great. Wonderful. Now I need to see a price failure of, resistance. Here we have it. There's my price failure. There's my confirmation bar, my target. Everything is perfect. Soon as my confirmation bar closes, I'm short right at the open of that bar there. I stay with the trade. I get a red bar. There's my red bar. As soon as my red bar closes, I'm exiting my position. And again, why? The red bar says, the red bar tells me to get out of the trade. The red bar is telling me that there's transition ahead. There's turmoil. You have, large blocks of, buys or sells, depending on what's happening in the market at any given period of time, is being executed on the chart. Because of that reason, we just say, we're not going to take any chances. We just exit our position, take profit. So now we're short. We're looking for more shorts. We have a price failure. Okay. The confirmation bar is green. Wonderful. Okay. So at that and at that point, our target is a new low. Okay. So at that particular point, it's like, yay, as soon as my confirmation bar closes, I enter my trade. Immediately you're stopped out. Immediately what happens is that your bar goes up and takes out resistance. Okay, so small loser. And I mark these as I go along, guys. I don't mark them and then show them to you after I get them marked. I'm going through them bar by bar. So, you're entered and exited on the same bar. And if you're trading manually, you look at this and go, well, if I hesitated, I might not have even taken that trade. Now, again, still looking for, those short executions. So now the market gives me a failure, and there's my confirmation bar. But at this point, I have a price failure as a target and not a failure. Now, again, these are discretionary trades. For those of you that, see all this setting up and say, oh, this is a great trade, I'm going to take it, take it. Now, I'll show you the outcome. There's your confirmation. There's my entry right at the open of that bar. And your price failure here that stood in your way, as soon as your entry bar closes, you've got a reason to get out of the trade. Now, again, discretionary because everything's down, and if you stayed in that trade, you'd have made a nice chunk of profit. Me personally, I like logic. If this, then this. Be consistent with your decision-making process. If you are, it'll never hurt you. It's when you aren't consistent in your decision-making process that the market hurts you. So we'll continue on. So I'm not marking a trade there because there wasn't any there. So you get your next oscillation. Price failure, confirmation bar is correct, target's wrong. And then the market gives you a failure. Great. There's your failure. Confirmation confirmation bar is wrong and your target's wrong. Then we get another price failure. Well, price failure, and then your confirmation bar is wrong. So it kept you out of a lot of this consolidation. Now the market turns to go back up. Okay, great, wonderful. I'll move this over a little bit. And no trade entry before the market turns to go right back down again. And you go, oh, look at this beautiful short I missed. Yeah, okay. And there's a reason. Hold on, I'll show you. If this would have been a new low, this would have, you could have taken this as a color change trade, but resistance was making a new high and support was making a higher low. So you had no rational reason to take a short here. So we're just being patient and waiting. Okay, so next trade setup. Comes up, creates a price failure. Wonderful. Gives me a confirmation bar. Wonderful. And at that particular point, I'm going to go short the opening of the next bar, which is here. Now, short. 2 bars, comes up and gives me a price failure. Also gives me a price failure here. In this process, this is the one that I don't want to see because I'm trading short. This is telling me that I'm hitting, either an exit area or a pocket of consolidation. Either way, I want to get out of the trade. So as soon as that bar confirms here, I'm exiting that trade right at the open of that bar, which is right there. Remember, my entry was right here. And ooh, I get a tick profit, not enough to cover commission, but that's okay. We aren't complaining about our trades. Now, next trade entry, out of that trade, exited on that bar. There's my failure bar. Here is my confirmation bar. And at this point, you have a target that is a failure. The target is not a new high or a new low. Now, what do you do with them? It's a choice. I'm gonna mark it just because everything is down at this point, and the transition is potentially, I'm going to take it as it's going to the downside. So my entry is right here. Well, as soon as I break through those levels, I go up and get a red bar. I get another transition. So I'm not going to take any chances at this bar. I'm going to exit at the open of that bar, and remember, your entry was right here. $10:30 in the morning, still got a ways to run. Picking them off. There's my price failure. Okay. There's my confirmation bar. Okay. So my entry on that bar is everything set up. Background green, have a price failure. My target is support, and it's a new low. Yes, I'm in. Immediately, I get a blue bar. Don't you love we're already seeing this consolidation in here. Failure, 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 failure. So remember, when we're getting a lot of those transitional failures, price failures together, we're in consolidation. We were hoping that we were going to track out of this. Well, there's your price failure again, the oscillation we don't want to see. There's your confirmation of that price failure, and I'm going to exit on the open of that bar. Now, remember where I entered was here, so my exit is here, my entry is here. You start seeing the way price plays out like this on Tuesday. Everything is in prep for what's coming out with the crude report tomorrow. Price failure, confirmation correct, target wrong. Price failure, confirmation. Okay, now you've broken through these. You've now broken through your target. So when your confirmation bar closes, your target at this point is that new low. So price failure, confirmation bar, there's my entry. Now, nice drop. 3 blue bars in a row. That's our, our fail safe to exit a trade. Entry, the open of that bar, the bar following the third blue bar close. And the entry, remember, there's your price failure, there's your confirmation, and there's your entry. That makes up for a couple little dingers. Now, price comes back up, gives you another price failure and another confirmation bar. But problem is we have a failure as a target. Price failure, confirmation, wrong color. Price failure, confirmation, correct color. And at this point, you have broken through, when it confirms here, but you've matched. So it's like, we know that we're going to match, give us something that's, that's going to keep us out of the trade because it matched. So now we're just going to wait for further confirmation. Price comes back up. Now it gives us a failure. Now it gives you confirmation back toward that new low or matched low. So there's my entry. And again, another red bar. So there's my exit. So as soon as the red bar gives me my exit, I'm going to take my profit. Another price failure bar, another failure bar, sorry, another confirmation bar. Well, sorry, I missed one. There's your price failure, confirmation bar, wrong color. There's your failure, confirmation bar, right color. So as soon as that confirms, we have a new low target. There's my entry. Now, at this point, there's 3-bar exit. My exit is at the close of the third blue bar, the open of the bar following the close of that bar. 3 blue bars exit. So there's my exit, my entry. As soon as that bar closes, there's my entry. Price failure, fine. Confirmation, wrong color. Price failure, failure, red bar, don't care. Confirmation bar blue, great. There's my entry. So my entry is right at the open of that bar. There's the red bar at the bottom telling me get the heck out of that trade. So there's my exit. There's my entry. Time now, when you got out of that trade, 12:08. So let's scrunch this together and see what we got for today. Oh, 48, 49, 69, 74, 84, 86, 91, 108. 108 minus 14. We netted out Oh, $94 for the day. Not bad. And again, you're trading, that's $94 per contract, and you're trading from 6 to noon. 1, 2, 3, 4, 5, 6, 7 winners, 4 losers. I'd say that's respectable for the day. A little bit later on, I will do a couple other markets. I'm building workspaces today, so I'll try to get another one out here today. I hope you enjoyed this. Give me some feedback.